do not lose the human touch. That's very important to everybody. The change and the adaptability to change. That's the biggest lesson of life. We are living in an information technology age. The education portion is very, very important, especially in this time. The goal is to connect with people.
Welcome to another edition of Ask the Multifamily Expert. And with me, I have Vicky Lumba. We have quite an interesting topic to discuss today. And one of the reasons why this topic is top and center is because of the economy and what is happening to the investors and the multifamily trend that we are seeing. So it has become very, very important conversation, and we all are looking for ways to navigate the negativity of it and to see how we can continue on a multifamily journey. Once again, my name is Bibi Ofiri. This is another episode of Ask the Multifamily Expert. We do this for people that do not know so much about multifamily. They can come and ask. And even if you're a savvy investor, we really cannot know it all. So we always invite experts like Vicky to come and talk about, and we ask them questions about things along the multifamily and how we can also apply those things to our journey. So now, if you have questions, you can see the down part of the description area on your screen. You see the Q&A session. Please go in there, type your questions. And if you want to ask directly to Vicky or to me or to anybody here, please raise your hands and we'll bring you up to ask your questions. Before I go into today's discussion, Vicky, capital raising has been very, very difficult. I've been raising money for some years, but this year has been quite a challenge compared to subsequent years. Like in 2020, 2021, it was pretty much, do you want to invest in my deal? Someone will cut a check for you, and it was that easy to get them on board. But right now, it's taking a lot of innovation, a lot of practices and all that. So we are going to have this conversation to you to ask you, first of all, to introduce yourself, then we can dive deep into today's conversation. Go ahead and introduce yourself to us.
Yeah, I was just going to say, first of all, thank you so much for inviting me to your show. That's such an honor. And my name is Vicky Lumba. I'm a founder and CEO of Lumba Investment Group. So my journey in real estate investing started alongside my long career in IT and academia. I come from a strong IT background. I was an IT professional or executive for 20 years, I think almost 22 years. And with that career, I had a second career. I was a professor at California State University, and our adjunct professor used to teach 2 courses every semester for the grad program. And I really enjoyed that, doing 2 jobs. And then by luck, you can say, we became default landlords, because when we built our second home, we rented our first one and we realized the passive cash flow, about $500 or so. So we thought, whoa, we didn't know that. This is something new. So we started multiplying that. So that's how we grew into the real estate world, and we started connecting with the like-minded people. I learned a lot from everybody, and slowly we moved into the multifamily, and now I'm a full-time investor in the multifamily space. Actually, I have a diverse kind of portfolio. I have multifamily as well as some industrial and self-storage as well, and some land and development projects as well. So pretty happy being here and enjoying helping others, whether they're investors or through my nonprofit efforts.
Before we dive deep, I have a question for you. What is a professor as well as an IT expert that is earning 6-figure amount? Why would you want to switch from that to multifamily? Since you're already earning the money and all that, why did you decide to switch?
That's a really good question. First of all, it's not always about money. And I had a good career for 22 years and was really happy there. And but then I had a small little real estate portfolio between me and my husband, the single family homes and stuff. So we were managing it ourselves. So we knew about the real estate investing. We knew about the passive income. We got introduced by default, but we learned a lot. But when I took early retirement from my corporate job, I thought, I'm retired. I'm not going to do anything else. I'm just going to enjoy life. But I had this big, hairy, audacious goal. I wanted to touch 1 million lives in a meaningful way through my nonprofit initiatives. So the question was, how do I do that? find another job, corporate job, go back to the corporate world, but I didn't want to do that. So I chose to be an entrepreneur. So basically, I came from a corporate mindset into abundance. So that was the mind shift change for me right there. And that kind of opened up multiple opportunities for me when I stepped into the entrepreneurship world.
Fantastic. This is beautiful. So when I see people like you, I wonder why some investors cannot take this as an opportunity, because what multifamily does is it gives you freedom. And I'm sure that was part of the things you're looking for. You had the money and all that, but maybe you didn't even have the time for yourself. And you were like, I need to have freedom and all that. So that's the very beautiful thing about multifamily that we all enjoy. Let's go down to the topic. I'll be asking you questions right now on the current trends in capital raising. What are the most significant trends you see shaping the capital raising in multifamily real estate today? Not last year, not 2 years, like today. What are the trends you see?
That's a really good question. And I think that's a question in everybody's mind, not just you and me. In my experience, I think it's a bit of mixed feeling right now because investors are hesitant due to uncertainty because multiple things happen, interest rate hikes, inflation, the overall economic climate due to this pandemic. People were kind of pigeonholed, like kind of limited. And then when they were kind of limited, they got into the unlimited space because they learned more about themselves, more about they were doing. They have so much time to kind of strategize things for themselves. So they got a little bit more cautious. But I think savvy investors, they know this might be a challenging time. But again, like Warren Buffett said, when people are fearful, get greedy. So they see the opportunity in this challenge too. And they're looking for the solid deals. And it might be like looking for a needle in a haystack, but they're finding the good deals. They are investing. But I see, in my area, a lot of people are sitting on the sidelines. They're sitting on my sidelines, they're waiting for the right opportunity. So they want it, but they seem to have like a little bit more calculated approach. They want to see the returns upfront. They wanted to see solid returns versus waiting few years to see the return on their investment. So they are like looking at deals more closely, what makes sense versus just looking at the numbers, 20% return or 30% return, and that just invest just like that. So which I really appreciate that because that takes a lot of burden off of our shoulders as a syndicators or the capital raiser, whatever your role is accordingly, because they are stepping up into the due diligence process and they are looking at things very closely to make things happen for themselves, which is a good thing.
Yeah, it's good. And it puts some form of responsibility on the sponsor to do their due diligence properly, because if they don't, they'll be asking them questions. Why is this, and why is that? And I think it's important that investors start to put those burdens on the sponsors to take responsibility of the kind of deals that they bring to them. So I remember that you just recently closed on a deal. Compare that deal to the one you did last year. How was it? How was the raise? I know you've closed on it right now, but was there any form of struggle? And if there was, how were you able to mitigate and go through the challenges that you faced while raising this current deal?
Actually did see a little bit difference, but not too much difference. Because my thing is I like to educate my investors. And then I always invest alongside my investors. And until unless the deal makes sense to me, I do not bring to my investors. And then I think the education portion is very, very important, especially in this time, because the hesitation and the fear on the investor side is due to, I say, lack of knowledge, or there's a knowledge gap right there. Because think about yourself, if you wanted to walk on some unknown train, a new train, you'll feel kind of confused or lost. You feel like, oh, where are the directions? I don't have the directions where to go. So this is kind of a little bit hand-holding time for us, and then giving investors a vision or help them understand our business plan. So you wanted to get kind of in their board and then see what their feelings are, what their sentiments are in order to bring them on board. So I think there's a little bit more effort on our side, but as long as you have a strong business plan and a strong track record, meaning they know you, they trust you, and they see your pattern over and over again, that's the other thing I talk about that all the time. No matter what industry you work in, everybody has a set pattern. You work on those patterns, knowingly, unknowingly, you're following those patterns all along your life, right? until unless you wanted to change it. So that's the true track record for you. It's like you showing up every time. Are you showing up the same? Are you adding the same value? Are you giving the same information to the people, whatever they're looking for? Are you talking from their point of view? Are you seeing their perspective? All those things matter. At least to me as an investor, that's really, really close to me. I don't want to invest with somebody who will come, who will really nice to me. Hey, I have this deal, this and that. I put $100,000 and they disappear. And I don't see them for years, So those kind of relationship I don't believe in. And I think as long as you have the strong relationship and the trust relationship, people know your track record, people know who you truly are. I think there's a little bit less hesitation right there.
I so agree with you. And I like what you said about education, because really that's also my strategy. People don't invest in what they don't understand. And that is a very easy way for you to get a no from your investors. So the strategy of education, like you said, in educating your investors is very, very important in this day and time. And I see that you're doing that in full force. And I'm sure that's why you found your capital raising very easy and it went smoothly and all that. People can also trust your track record. You've been doing this for a while. So definitely it should be an easy strategy for you to go through. So now we're going to move to technology and innovation. You were once into IT, so I really want to hear how you're going about this. How is technology transforming the capital raising process in this day?
I think that's a really important question, and everybody needs to understand that. We are living in an information technology age. We are living in an age where nobody has lived before us. So everything on our fingertips, as long as we know how to leverage the technology. Remember the olden days, people used to make the spreadsheets to share information. You're sending one email, it's like one-to-one kind of thing. A lot of effort was there. So it's like one to many now. There are so many social media portals. It's just like how you position yourself, how you present yourself. Does not matter what approach you use, whether it's a guerrilla approach, buzz approach, whatever way you're trying to create your presence. By the end of the day, the goal is to connect with people, connect the right people with the right people. Technology is playing a really, really big role in that because there's so many different ways that you can connect with people that like it's just like overwhelmingly so many channels out there that you can connect with people. But then you're bringing your aura, your vibe, your energy through those channels to connect with people. And mind it, all these relationship has to be meaningful. And the thing is, as you keep in mind, by the end of the day, people like to invest with humans, They trust the humans. They want the human interaction. No matter how much technology is out there, by the end of the day, investor will love to hear your voice. They will love to talk to you. They want you to have that feeling of just like, what do you call that? That feeling of trust, integrity, the feeling of the no, like, and trust feeling. And the thing is, the technology plays a big role in that because when you're all over the social media, people see you, people hear you, they think already they know you. But the thing is, when they talk to you, when you get on the phone or meet them for a coffee or lunch, you know how that's going to play a big role? All of a sudden, it's going to be like this. You're going to connect because they already know you. They're seeing you everywhere. Your emails through all the multi-media channels, or you can say you're omnipresent, So that's the biggest advantage of technology I see right there. But do not lose the human touch. That's very important to everybody.
Yeah, so please, guys, don't lose the human touch. And that is very critical. People want to relate with you directly. There was an investor, we had a conversation, and she said she invested in a deal. And the GPs, or general partners, they normally communicate to them through AI. And since they closed, they've not heard the GP's voice. It's been an AI or something talking to them, and they don't like it because there's no personal feeling. And they were like, why didn't you send AI to me to get my money? Now we've closed, and now it's AI that is doing the job. So just like you said, we can't take out the human factor in this entire technological process and all that. So that brings me to asking you, what role do you see AI playing in capital raising going forward? Because AI is becoming a very big deal right now. If you're not using AI, then I don't know what you're doing. So yeah, so how has that impacted in capital raising?
I think AI is just not, it's like a whole new phenomena. It's like such a big thing. And then AI and data analytics, that's the other thing, terminology I'm going to use here. These two play a big role, whether
Yeah.
you're raising capital, whether you are connecting with brokers or you're trying to acquire properties, you can do multiple things. It one versus many, like I say all the time, like one mind versus many mind, million minds out there that the AI has the compilation of, and by the end of the day, again, it comes to you. It boils down to what do you want AI to do for you. AI is just a tool. That's what you have to understand, that AI is just a tool. You cannot put out AI on the driver's seat to do everything for you. You're going to use AI as a tool. So you need to know your vision, you need to know your goals, you need to know your address, where you want to be, and knowing your present address as well, because that's very important for everybody. Need to know your present address and need to know your future address. Then you'll be able to figure out or pave out a way to get there. And then you can use the AI tool to figure out what is important or how you're going to create that path for yourself. So again, I have created multiple customized GPTs for me. For example, the social media GPT, my email marketing GPT, my due diligence GPT, because the thing is all these GPTs, even the investors can use it too, especially the due diligence one, because you can feed all the information about the particular market, the job, population, whatever. It can research everything and it can provide you the particular data that you're looking for. And that's where I think data analytics play a big role too. That's why I say today's economy or today's world that we live in is all data driven. It's an information technology age. So the thing is, it's just like how we leverage that information for our benefit. That's called wisdom.
You're so on point with what you just said about data analytics. And that is a very core part that people don't realize that they should be using, because collection of data is so broad. Your collection of data, but the problem now is how do you use those data to bring out results? Like we collect phone numbers, we collect emails, we collect different data from people. Now, how do you now convert those data to give you money or raise money or use them to raise capital and all that? So that's another another aspect, not just collecting the data, just like you mentioned. I'm going to move straight on to the economy. Some people will argue this with me. I believe that the multifamily space is gradually coming up. It was at the lowest point some months back, but I think we've reached the lowest point and I think it's going up at this point. So based on that, my question to you is, how are the microeconomic factors such as interest rate? The Fed just reduced interest rates by 50 BP a few weeks ago, and we are looking at another one maybe after the election. Hopefully, we are hoping that that happens. How is that affecting your capital raising? Is it making your investors loosen up? Is it making them see more light in the entire thing? Or is the election, is it affecting them? Are they trying to wait? Like you said, wait on the sideline to see who will be the president. All those things are macroeconomic factors that can actually affect investors. So how are you navigating that aspect?
Yeah, that's again a really good question because everybody's wondering about that. And like I said, again, it's mixed. Some people, they are so worried. They just worried about the market, which way it's going to land, this way, that way, waiting, election's going to happen. But there are people who are opportunists. They see the silver lining. They see like, okay, this is my chance to go in and I'm going to go 100% in. I'm going to find that needle in the haystack and I'm going to make it work in my favor. So it does not matter to them what the interest rate is, where the market is going, because they're seeing the opportunity in this market. Because whenever there's a challenge, there's an opportunity. And I agree on that Fed is reducing the interest rate. They did one cut, 50 basis point. They're going to do maybe a few more. And we are waiting on that too, so that we are actually looking to refinance few of our properties, and that's going to be like a really good time for us, and really good time for our investors. But the thing is, for the new investors, if they are going into the deal, like I say, they are focusing on the solid deals with a solid business plan. As long as you have a solid business plan, and then let's say if you have a capital event already baked into your deal 2 years down the road, even you're going a little bit higher over here and with a solid business plan, that might resonate with the investors. So the thing is, all these things, interest rates, cap rates, all these things play a big role as long as you have a solid business plan and then you're implementing that plan according to your project plan and the way you have laid out. But if you're not following through, that all that does not matter. And the other question that you asked me is that people are thinking that we are the rock bottom. You believe that too? A lot of people believe that, but it's kind of hard to say. But I think at this point, or any market, it's a good idea to take the dollar cost average kind of thing, just invest a little bit in every market. So it's going to average out overall, because you never know. Some people already hit the rock. People coming, oh no, this is the right time, or it's already done, right? So these are all the speculations. So creating your vision and sticking to it, and then creating your own personal plan that how you want it to turn this challenge into your opportunity is going to matter the most.
I like the aspect of you saying the business plan is very key, especially when you're considering the macroeconomy. I tell people that as long as you follow the fundamental of multifamily, at least you've done a lot with that. Your decisions will go right if you do the right thing from the beginning. And I also tell people you make money when you buy, not when you sell, because when you're creating your business plan and doing all that, you're also looking at the macroeconomy and also checking out how it's going to affect and how it's going to affect your long-term goals and all that. I like the approach that you said. The business plan is very, very important, and that will help you navigate the microeconomy when that time comes. The next thing, very interesting. I have a question here for you. It says, what innovative strategies are you seeing sponsors and operators use to attract capital in the current market? You said you do industrial, you do new builds, new developments and all that. So as a sponsor, what strategies are you using to attract capital to your current market? Is it through syndication? Is it through funds? What strategies, crowdfunding? What are strategies that sponsors should use for their deals?
Again, I'm going to talk about my experience because I'm not speaking for anybody. So in the current market where we are, the more simplified approach is going to work. The more you're going to simplify things, people are going to resonate with you more. If your capital stack is convoluted, you have this pref equity there, you have this, major loan, and then there's a secondary loan, then there's class A, class B, class C. It's just like very convoluted capital stack. People don't like that. So more simplified version if you use, and that's what my strategy is, just have a preferred return. After preferred return, have your capital return back to the investors, the original capital, and the profit split. And people like that simple strategy, and that works. And I've seen that a lot of operators, a lot of sponsors are already doing that. The sponsors, at least that I work with, like my partners, that's the simple strategy that we use. That's easy to understand, and it works. Because people know the waterfall is such a simple waterfall. It's not convoluted. It's not confusing them. And you know that the confused investor will never invest. Never. No matter what you give them.
No matter what you say. In short, when it becomes more complicated, just forget it. You're losing them. The next question I have for you is, what are the biggest challenges that sponsors face while raising capital today? And the reason why I'm asking this is not just for you. I know you are friends with other sponsors, and definitely you have conversations with them. So what are the biggest challenges that they have in today's market, and how are they overcoming them?
I think everybody is facing kind of the same thing, because the uncertainty basically, and the investor emotions, because how the market trend is. With the market trend, we kind of feel up and down. I mean, just talking to investors, just think about ourselves. We are investors too, right? How we feel about the market, how we feel about the deal, that's how we have to feel about the investors. They might have the similar feelings too. So what you can do is, at this point, I think not right now, it should have been done all the way along, build the trust relationships. So the relationships has to go beyond the transactional relationship, because a lot of people I see in the industry, their relationships are based on transaction only. Those are I would call it transactional relationship, because you give me this, I give you this. It's a pure transactional relationship right there. So like I tell people all the time, I'm not in the transactional relationship. I'm like truly relationship building. So I go in and I build strong relationship with people without talking about money, without talking about anything. I just wanted to have a kind of a trust relationship. And when it comes, when I feel like, okay, they have enough knowledge, they understand where I'm coming from, where I'm working, what I do, let them ask the question. What do you do? And then share with them. That piques their interest, So those kind of relationship, I think they work in the long run. And these are the long-term relationship anyways, because even if you're doing a 3-year deal, 5-year deal, 7-year deal, 10-year deal, you're marrying that person for that long time period. So you have to give them that trust, like they can pick up the phone and call you anytime. Like I give my investors the white glove service because I tell them, when we invest together, we are pulling the money. It means we are like an extended family. So we should be open to everything. And the other thing is investors, they wanted to experience everything because everybody is into this real estate investing for experience more than the money. Always remember that. It's not the money. Because the thing is, I'm going to give you this example. Let's say if you have investor A, you turn their investment into 2x, 3x multiple. But if they did not have the good experience throughout the time, they're never going to come back.
Regardless.
Because you're not even an important person for them. Because everybody is in it for experience. And I think the returns are just like feather on the top or the cherry on the top, you can call it. Because the thing is, they wanted to experience everything, the good, the bad, the ugly from 10 feet away. So that's what we need to give them. So that's called communication. So there has to be constant communication, not just the monthly newsletters or whatever. So you have to go beyond that too sometimes, to give them that, that feeling, that touch that we are human, we are friends, we are in this together, and we're going to get this through together.
I want to ask you this personal question because I used to find myself, I'm an introvert, extrovert. So I'm an introvert when I'm not doing anything, or when I'm an extrovert when I must be, maybe when I'm outside, I just have to, talk to someone and all that. But I find myself, I'm always indoors. I really don't go for gatherings and socials. That's why many people don't see me. You only see me on maybe social media, but life, it's hard for you to see me. And not because I don't want to, but because I'm an introvert. That's what people don't really, really understand. So for people like us that we really, really care about people, we so care about investors. But because of our personality, how do we navigate such thing to ensure that we are not passing out a wrong message to our investors that we do not care, whereas we actually do care, but our personality is in the way of preventing that from happening? So what advice will you give to people that falls in my category?
Okay, so first of all, I wanted to tell you that everybody's introvert and extrovert to some extent. It's more like situational, it's not like all the time everybody's extrovert or whatever. So when you're talking to investors, the communication is the key, like I said. And the best part of the communication is listening. Listening is the best. So when you're listening more, you're more effective. I don't even have to say anything else after that because you won't even feel that you're extrovert or you're introvert, because don't be on the side where you're always thinking, what should I say next? Versus listen. Give your ears, focus what they're saying. And when you're listening carefully, you're going to figure out what exactly they're asking. Maybe it's sugar coated, or maybe they're blunt about it. Maybe they're not too happy about it. Maybe they're angry about it. But listen fully, and then you will exactly know what to say or how to handle that situation.
Perfect. Thank you for your response. So I'll take that into consideration. I have a question here from you. And the person says, what advice would you give to someone looking to raise capital for their first multifamily deal?
Oh, I think everybody asked me that question, but I would say just take an action. Just do it. Just get out of your box. Just do it one time. So it's not that hard. So building relations, but just do it. Just face your fears. And if you're new to it, it's not a rocket science either. It's just knowing yourself. The more you're going to spend time with yourself, you're going to know your patterns. You're going to realize who you are, how you act, how you react, how you respond. And in our world, respond is the main thing. We shouldn't be reacting to any situation. So we should be responding. So I think when you start doing something and when you get to that phase of responding, everything starts falling into place by itself.
Thank you for that response. I have two more questions for you before we call it a day. One is about the global capital flow. In 2021, 2022, due to the pandemic, we saw an injection of cash as never before. The economy was filled up with a lot of money, and that's why investors could invest. So my question to you is, are you seeing such global capital flowing into the US multifamily market anytime soon? And if so, what trends or factors are driving this?
US economy is, I think, still good economy according to a lot of people. A lot of people look up to us. And I do not have any foreign investors. So I cannot really speak to it much, but I know that from my network or within my circle, my colleagues, they are getting a lot of capital in, and through their efforts, whether they are doing through EB5 because they're doing the development projects, they're attracting a lot of capital through EB5 or other efforts they're doing. And I know that our Canadian friends, they love to invest in US, even our Israeli friends and Dubai. And then a lot of people, they like to invest. And then I can talk about that a little bit, how that capital is coming to US through others' efforts. But I do not have any foreign investors, so I cannot share any personal experience on those grounds.
Okay, this is the last question. Based on your experience, what lesson can be learned from past capital raising or past capital cycles that might apply to your future multifamily real estate? So, what was your biggest challenge? Let me put it that way.
You mean biggest challenge or biggest lesson?
Biggest lesson, sorry.
Biggest lesson. I think that's not just for capital raising only. I'm going to talk about overall the change and the adaptability to change. That's the biggest lesson of life, and that's applicable in every situation. The more adaptable you are, the more things you'll be able to do. So you change is the law of nature. And I give the example. I used to give this example in my classroom, but I'm going to do it over here. To remember Kodak?
I'm enjoying it
Kodak.
already, so please go ahead.
Remember Kodak, they used to develop all the films and everything. Remember that? That was an old company. So that was used to be such a big name at one time, right?
Yeah.
What happened to that? Because they didn't adapt to the change. They're
Yeah.
obsolete. So if you don't adapt, you're gonna obsolete. So always stay kind of up to date to the current market trends or what's going on. And I would say not just market trends, all around your surroundings too. Just have a holistic picture, stay updated all the time, and then be willing to be more fluid. So you're adapting to the change as it comes to you. You take it as an opportunity, and believe me, you'll see so many opportunities. You won't even see any challenges at that point. You'll see like, oh my God, let me do this, let me do this, let me do this. That's all the opportunities because you're so fluid. You can go this way, that way. You'll make things happen at that point. So that's the only lesson I have learned from all my experiences. So I don't like to be stuck up. I'm very fluid and I just like the change because I know change is the law of nature. And the more adaptable we are, more resourceful we are able to connect more dots. And when you're able to connect more dots, I mean, there's no end to it, basically.
Fantastic. I really had a good time. I can imagine what your students, when you were a professor, would have felt when they were in your classrooms. I'm sure they would have enjoyed your courses. I'm really sure they did because based on what we just had today, this conversation, it was really, really good. I enjoyed every bit of it. It was more like a reminder and all that. So for the audience, if you did not go home with anything, go home with, she kept mentioning the human factors, kept mentioning relationship. She mentioned communication. If there's nothing that you got out from here, capital raising has the human factor, irrespective of if you want to use the technology or whatever. You cannot take out that human sympathy, human factor, communication, relating with your investors on a continuous basis and not just on a high level relationship. It must be an in-depth or a relationship that is not transactional. She said that, so I'm just giving an overview of everything that she has said. Vicky, we really had a good time with you. So before we go and call it a day, what is the one thing you want to leave with the audience that they should remember from today's Q&A?
Okay, I'm going to say something that I say every time, wherever I go. That's not real estate. That's nothing. I say, whatever you do in your life, wherever you go in your life, no matter what your aspirations are, vision or whatever, just don't forget to live. That's the bottom line. Learn to live this life because it's not a destination, it's a journey. Enjoy the journey. When you're going to start enjoying the process, it's going to take you there wherever you want it to go. So don't stop living. Just live this life, which I call it a chaos, but it is a life. Enjoy every moment. That's the last word I have for everybody.
Thank you so much. We're going to start living our lives going forward. One last thing, how can the audience or anybody listening to this contact you? I know you have it there, but is there anything that you're doing at the moment you want them to know about? Or is there anything you want to talk about or how they can reach you?
Yeah, sure. I'm all over the social media. You can connect with me on LinkedIn. I do have my Calendly app there. You can schedule a call with me there. And I love to connect with anybody and everybody. And I'm always, looking to raise capital or partner with people and bring them into my deals that I have, because I have a good deal flow all the time. So I love to connect and share knowledge. I do have a lot of education portals. I have a podcast, The Real Estate Vibe. You can tune into that. I have a monthly webinar that I do. And the next one is coming up in a couple of weeks on the 24th of October, I think. Let me double check the date. It's going to be, 24th of October is going to be 10 a.m. And it's on building walls on the tax strategies. So I'm bringing this speaker. She's awesome. She's called Tax Goddess. So she's going to be there. So she's going to be talking about all the wealth building strategies. And please, you're all welcome to join. We'd love to connect anyways, to share knowledge and exchange ideas.
You know what we'll do? We'll reach out to you, we'll get the info, and because we normally send messages to all participants or whoever did not come but registered to be here. So we'll get the info and also distribute to them for them to attend, because it's very important. The more education people get, the better it is for them. So thank you so much, Vicky, for taking out this time to answer our questions, our numerous questions. So for the audience, next 2 weeks, because we have this every other week, we'll be inviting someone in the Triple N space. She will be telling us how we can navigate the Triple N industry. Triple N is a different business from multifamily. So she's going to tell us the benefit of it and how you can use the proceeds of that to run your multifamily business. So she's going to be, she's expert in both. So she'll be discussing about both. So for those of you that are interested in Triple N, learning a little about Triple N and how you can use it to invest in multifamily, I will enjoy that you come in. And in November, I'll be inviting our CPA. This is the end of the year. What are strategies you should start doing before the year wraps up in order for you to either reduce your tax liabilities and all that. And finally, if you are not following us on our social media platform, I don't know what you're waiting for. We are on YouTube as Blue Ocean Multifamily Group. We have different content on multifamily, the A to Z acquisition, capital raising, anything about multifamily, you can find it there, building a team and all that. And we also have a Facebook group, which is Blue Ocean Multifamily Group, where we also spread out our content for people to learn. And the good part of it is that it is absolutely free. So take advantage of our free content and use it to continue your multifamily journey. I started my journey using freebies like this because I didn't have money to pay for mentorships and all that. So YouTube was my school at the beginning for many years before I decided to, when I started having money, to go for a proper education. So you can start your journey with this and it will help you to become financially free. So thank you all. Thank you, Vicky, once more again for taking out the time to be with us. And thank you, the audience, because if not for you, I'm sure we would have been talking to ourselves. Thank you for coming, and I will see you in 2 weeks.